Procter Gamble might be the best Dividend King on the market right now. This company just reported their latest earnings and beat analyst expectations for both revenue and earnings per share. This company posted some massive jumps in revenue and actually announced that they are raising their future guidance into 2021. This is big news because of the pandemic. A lot of companies are reducing future guidance expectations because they are not optimistic about the future of their next fiscal year. But Procter & Gamble did the complete opposite. This Dividend King, this consumer brand staple that's been around for a long period of time, actually chose to increase their future outlook into 2021 because they have seen a nice growth in demand for their cleaning and laundry products. So shares of the company did see a nice increase to start off this trading day after news of this positive quarter. So PG in the latest quarter announced $1.63 of earnings per share compared to analyst expectations of $1.42, and they actually beat on revenue by close to $1 billion. They posted $19.32 billion of total revenue versus the expected $18.38 billion. So overall in the quarter, the company reported net income of $4.28 billion and, like we saw earlier, $1.63 earnings per share, which has seen a nice jump compared to the same quarter last year, which only brought in around $3.6 billion. So because of the nature of the healthcare products offered by Procter & Gamble, this is one of the core businesses that is actually seeing growing demand during this time of economic uncertainty, when a lot of other brands are seeing reduction in sales, reduction of people going in that demand for their products is down. PG has seen the complete opposite. The nature of their products, the healthcare, consumer, beauty, oral care products that they deliver to consumers are only growing in demand, and this may mean that PG is the best Dividend King on the market right now. So in this video today, we're going to take a look at PG, go through this quick little overview of their latest earnings report, take a look at what analysts are expecting for the future of the company to determine if this is the most solid brand we want to own right now. So thank you for tuning in, everyone. As you know, I am the Gen Z investor, and every single day we talk about the stock market, go over different stocks you can buy and sell within your portfolio, and of course, we always discuss big market news and headlines like we're doing today with Procter & Gamble's big beat on revenue and earnings. So please hit that like button and subscribe, and we're going to continue on with this PG analysis. So Procter & Gamble currently trades at $143 a share under ticker symbol PG. Over the past 5 years, they've seen 88% share price growth with a recent surge as of late. They have a market cap of $353 billion, making it one of the largest companies in the S&P 500, and have a current dividend yield of 2.23%. This company is a Dividend King and has actually been growing their dividend for over 64 consecutive years, and the current yield of 2.23%. They only pay out around 58% of their earnings in a form of a dividend, and they consistently grow that dividend over the past 5 years of an average of over 3% per year. So not the most significant dividend increase each and every year, but that dividend is growing slightly, outpacing inflation, so you're getting a little bit of a raise on your money every single year. And although they have a low dividend growth rate, they have the highest dividend safety rating possible, coming in at 99 from Simply Safe Dividends. So this just represents that PG is very unlikely to see a dividend cut anytime soon. It is considered extremely safe, and investors don't really have to worry about a reduction in their dividend payment over the short term as well. So back to the earnings report, they actually saw that now e-commerce represents around 11 to 12% of their total sales. This is big news because they sell kind of small, everyday consumable products that people aren't used to buying online. So if they can get consumers into the habit of just automatically reordering their brands online through digital services, it can lead to huge growth potential for Procter & Gamble. And if they can get consumers used into that routine of just consistently reordering goods when they're low or have run out without actually having to leave their house to go to a store and see all the competitors on the shelves, Procter & Gamble might be in a nice position to gain more market share over their existing competitors. They saw growth in a bunch of different segments of their business. For example, home care saw organic sales growth of over 30%, and this was fueled by demand for some home cleaning products such as Mr. Clean and various other brands. Overall, they saw nice growth in their beauty segment as well, and what we're going to do in this video is take a look at their latest annual report to see how much each of these segments take up or make up of the total revenue for Procter & Gamble. They also saw a nice increase in their future guidance. They now expect sales to grow 3 to 4% next year in 2021, and this actually increased their previous guidance of only 1 to 3%. So it shows that they are more optimistic and more on the higher end growth into the next fiscal year, and they see organic revenue is now forecast to grow by 4 to 5% next year compared to only a 2 to 4% previous expectation. They've also seen a nice reduction in debt, and they're actually forecasting growth of 5 to 8% from the previous year in earnings per share. So overall, the company is expecting some nice things, and they also announced that they plan to buy back more shares than they previously said. Once again, they now expect to bring in $7 to $9 billion of share buybacks, when previously they were only expecting between 6 to 8 billion. So a nice increase in guidance for PG. This might make investors extremely happy knowing that the company feels more confident moving into the next year. We're expecting more share buybacks, of course, which are intended to increase shareholder value, and we're expecting to see nicer revenue growth and earning growth numbers into 2021. Over the past 5 years, Procter Gamble has actually outperformed the overall market. That's what we like to keep in mind, because when you're picking individual companies instead of just holding a simple S&P 500 index fund, you want to buy companies that are either going to provide you with nice consistent dividend income, and that overall their total return of dividends and capital appreciation are outperforming the overall market. And if you take a look, if we include dividend reinvestment, over the past 5 years, Procter & Gamble has returned around 111% to investors, compared to the overall market, which has only brought back just shy of 85% in the same 5-year span. So overall, Procter & Gamble has done a nice job over the past 5 years, outpacing the overall market and increasing sales, revenue, and share price. We're going to move on to their latest 2020 report. This on the right here shows a pie chart of how their net sales are broken up per each business segment. So you can see here, they have a nice diversified stream of revenue. Although fabric and home makes up a third of their total revenue streams, they also see nice revenue from baby, feminine, and family care, which makes up around 26%, beauty around 19%, healthcare around 13%, and grooming around 9%. So what that shows is, although all these segments were booming over the latest quarter, and for whatever reason one of them has a bad year, it's not going to put the whole business in worry. That's why I believe they have a 99 dividend safety score, because of course these products are essential to people's everyday lives, but the business actually diversified enough in a bunch of different brands in different segments of the healthcare market that we really don't have to worry about one single brand going downhill, impacting the total top or bottom line of PG. They also have some nice diversification with regard to sales by geographic region. So North America makes up just shy of around 50%, coming in at 47% in 2020, but we also see some nice sales from Europe, Asia Pacific, China, and Latin America. So although North America is still the majority of their market, we are seeing some nice diversification across the world. And you can see here from their latest results, over the long term, sales have slowly been trending upwards with a nice little jump in 2020. And same thing with regard to operating cash flow. It was sticking around that $15 billion mark, but in 2020 we saw a nice increase to over $17.4 billion. And a couple key highlights from their 2020 fiscal year was that they saw over 6% organic sales growth, 13% core earnings per share growth, and 114% adjusted free cash flow productivity. So some nice numbers to take a look at to show that 2020 was actually a strong year for PG and that they're expecting some big numbers moving forward into 2021. Why PG products are still in increased demand is just the nature of their goods. They have some healthcare products such as personal healthcare, like little over-the-counter medicines. They also have some oral care products such as Crest and Oral-B. These are brands that are well known and kind of dominate their respective markets that are really sold all across North America, and people use them as a go-to everyday brand. And these are products that will still be needed regardless if the economy is doing good or bad, regardless if people get laid off or have reduced income. These are the products they will still need to live their daily lives, and PG dominates that industry. They also have the Tide brand and Gain in their fabric care market, and they also have some home care brands that have seen a great demand such as Swiffer, Cascade, Febreze, and Dawn, and of course Mr. Clean has seen a 30% bump in the past quarter as well. So a couple of their other main segments are skin and personal care. People will still continue to need products like head and shoulders in their healthcare niche. No matter what, grooming for men and women, hair continues to grow regardless of the economy or how the stock market is performing, and these are products that will always be needed in high demand. And of course, to wrap off, feminine and baby care, these are all brands that are seeing rapid growth in demand because people are choosing to hoard up, stock up on these goods for whatever reason. Same with the family care, such as toilet paper and of course paper towels. These are new items where before people just bought them when they needed them, but now they feel the urge to stock up, have stockpiles at home, and buy more than they really ever need. And these are the brands that are striving to increase Procter & Gamble's total net sales, and I believe will continue to grow their net sales over the next few years as well, because they just have such a strong business. They have such a strong business model. All of these products will always be needed in demand, and this company has set themselves up so well for continued long-term growth. And like we saw, their 64-year dividend growth streak, I do not believe is coming to an end anytime soon. If we take a look at an analyst report for PG, they are currently recommended as a buy. They have 6 strong buys, 7 buys, and 8 holds, but the overall average of this analyzation comes in at a buy. The PG has seen a nice job of beating expectations. So we saw a nice beat today on their latest quarterly report, but this is not the first time they've beaten expectations. Over the previous 6 reports, every single time they've seen a positive surprise and have beat by at least 2.6%, sometimes hitting the double-digit surprises for total earnings per share. So they have a strong history of beating what analysts are expecting and continuing to provide investors with nice growth and good overall returns. And of course, annual revenue, we saw they expect guidance of around 4 to 5% total revenue growth next year, but analysts are expecting around a 3% growth in 2021, followed by around a 6.6% growth into 2022. So overall, a strong analyst report that believes PG is still a company that could be a buy right now. This Dividend King is not going anywhere anytime soon, and I believe they will continue to provide investors with strong dividend growth over the next 5+ years. I own PG in my personal portfolio, and this is a holding I have no issue continuing to add to whenever the market takes a dip, and I plan to hold for an extremely long period of time. So that was a little analysis on Procter & Gamble. They may be the strongest Dividend King to buy now. Just the nature of their business and the products they continue to sell are not going anywhere, have seen an increased demand as of late, and I believe this company can continue to beat expectations. We saw a strong report with increased future guidance that I believe only bolsters investor confidence and may make this the best Dividend King you can buy right now. So thank you for tuning in, everyone. I am the Gen Z Investor, and we will see you in tomorrow's video.